Let's talk about tax prep versus tax planning. Tax preparation records the past and the vesting of your company stock that's already occurred. Tax planning strategies anticipates the vesting and helps forecast for what it's going to be based upon where the price per share is heading. You cannot plan your way out of a completed year. We've seen a big shift in the industry for tax professionals. There are very few individuals that are solo public accountants anymore. Most have retired or they sold their businesses to the mid-sized firms. And because of that, a lot of these public accountants, they don't even want to do 1040s anymore for an individual. The margin is all in the business return. And because of that, they'll have a higher minimum. So you might be paying 3,500 bucks, let's say for a 1040, where your solo guy before was like 500. The consequence of this is with the mid-sized firms acquiring all the solo folks that have retired or sold their business is tax preparation has become sort of industrialized, if you will. And tax planning strategies is more of the norm. Specialists matter, coordination matters more, and someone has to connect the decisions. Withholding is a default, coordination is a strategy. If this got you thinking about how the rest of your tax picture fits together with your financials and your trust and estate planning, I've pulled a specific strategy series into one place for you. So I'm going to see you in my next video.